Welcome back to another episode of Grit, Grace, and Growth, the podcast where we explore the latest trends and strategies in real estate investing. I'm your host, Laura Navaquin, and today we are going to be discussing something every real estate investor needs to stay on top of, and that is current market trends. Yes. So, understanding the trends in real estate can help you make informed decisions, avoid potential pitfalls, and identify with new opportunities. So, in this episode, we're going to cover the key economic factors influencing the market, regional trends, emerging developments, and how you can adapt your strategies to stay ahead. Let's start by looking at the big picture. Economic factors are influencing the real estate market right now, and they always do. First up are interest rates. As many of you know, interest rates have a direct impact on mortgages and affordability. So, this affects the housing demand. When rates are low, borrowing is cheaper, which usually leads to increased home buying by the average buyer. However, when rates rise, as we've seen in recent years, it can dampen the demand because mortgages become more expensive. To illustrate an example here, consider a 1% increase in a mortgage rate. This can raise monthly payments by hundreds of dollars, making it more difficult for first-time buyers to enter the market. For investors, higher interest rates can squeeze cash flow and reduce profit margins on rental properties. Another major factor is inflation. Inflation affects everything from construction costs to rent prices. As inflation rises, so do the costs of buildings and maintaining properties. However, it can also drive up rental rates, which is a good thing for landlords looking to increase cash flow. But let's not forget about employment trends. Job growth in certain sectors or regions can lead to increased housing demands in some areas. For instance, areas like Austin, Texas, or Tampa, Florida have seen a significant real estate appreciation due to the influx of high paying jobs. As investors are staying informed about employment trends, can also help you target some of those high growth areas for your next investment. Speaking of high growth areas, let's dive into regional real estate trends. While the national market gives us a broad overview in real estate, it's inherently local. What's happening in one city, one state might be vastly different than another. For example, cities like Phoenix, Arizona, and Boise, Idaho have seen a massive surge in population growth, leading to increased housing demands and price appreciation. While some urban areas like New York City and San Francisco experienced slower growth and even declines during the pandemic and thereafter, though they're starting to recover, but it's something to keep an eye on. One trend that we're seeing in this continued growth in the secondary markets, investors are increasingly looking beyond major cities and targeting smaller markets that offer strong job growth, lower property prices, and higher rental yields. Think about places like Nashville, Tennessee. These areas are attracting both businesses and residents, creating the perfect storm for real estate appreciation. So if you're looking to diversify your portfolio, consider expanding your search to up and coming markets. But as always, you have to do your due diligence. Research the local market, the population trends, and housing supply before making any investment decision. Now, let's talk about some of the emerging developments in real estate world that every investor should have on their radar. First up is a growing interest in short-term rentals. Platforms like Airbnb have made it easier for every property owner to generate higher income compared to the traditional long-term rentals. However, this comes with increased regulations in many cities. So it's also crucial to stay informed about local laws before just jumping in. You don't want to buy in an area with the hope of making it an Airbnb rental that does not allow Airbnb rentals. Another emerging trend is the rise of build-to-rent communities. These are purpose-built rental homes, often in suburban areas, designed specifically for tenants who prefer the privacy of a house over an apartment. And investors and developers are capitalizing on the growing demand for single-family rentals, especially among millennials and Gen Z renters who want more space without the commitment of home ownership. Lastly, let's touch on the role of technology in real estate. Prop tech, short for property technology, is transforming the way that we buy, sell, and manage properties, from virtual tours and digital closings to AI powered property management tools. Technology is making real estate more efficient and accessible. Investors who embrace these tools can streamline operations, reduce costs, and improve tenant satisfaction. So, with all these trends in mind, how can you adapt your investment strategies and stay ahead in today's market? First, keep a close eye on interest rates. If you're planning to buy a property, lock in a low rate as soon as possible. Refinancing is also a smart move if you're already locked in at a higher rate. Nonetheless, I say this all the time, don't let a high rate scare you away, because when the rates start to drop too low, or not necessarily to say too low, but when the rates begin to drop significantly, that's when there's going to be more competition in the market, because the regular Joe like you and I are going to be out there purchasing homes. So you want to be able to buy even at these higher interest rates, and you make the numbers work with the purchase price of the home and with running it through a spreadsheet, so that you can make sure that you are able to cover the mortgage and any other associated costs like HOA fees, insurance, taxes, and so forth, even at the higher interest rate. And as long as you're buying in the right area, it will still work. Also, consider diversifying your portfolio by investing in different types of properties or exploring new markets. The key is to stay flexible and open to new opportunities as the market evolves. And lastly, leverage technology to your advantage. So, whether it's using data analytics to identify high growth markets or streamlining property management with automation tools, staying ahead of the tech curve can give you a competitive advantage. So, as we wrap up today's episode, remember, staying informed about market trends is essential for making smart real estate investment decisions. Whether it's understanding the economic factors that and how they affect the housing market, or keeping an eye on emerging developments, staying ahead of the curve will help you navigate the ever-changing landscape. And thank you all for joining me on today's episode. If you're looking to get into real estate investing and just aren't sure which method fits your circumstances or your needs, go grab and take the free quiz on Instagram. I have it on there and on the website. Go take it. It's free. It gives you a better idea. It asks you a number of questions pertaining to your life to help you decide what method is the best method for you and your circumstances. And then from there, I can help you get started on entering your real estate journey. Thank you again all for joining me on this episode. And as always, I welcome your input. So if there's anything in particular that you're looking for or have questions, either send me a note, send me a message on the website, or on a DM on Instagram. I'm always looking forward to hearing from you and getting your feedback. Until next time, go out, take a step forward, and have a great week.